I mean, silver's obviously tight in London, but it's also becoming tight in Shanghai. This is a global phenomenon. This is not, oh, there's plenty of silver, but it's in the wrong place. No, there's not plenty of silver.
The December silver delivery could
You're
be
watching
the final nail
Silver
in the
News
coffin.
Daily. Subscribe for more.
Right now, the COMEX is staring down a tidal wave of physical demand that it may not be able to meet. We're talking about a moment so pivotal, it could expose the greatest financial cover-up in modern history, the paper-silver illusion. For years, Wall Street has been playing a game of musical chairs with ounces that don't exist, hoping no one would notice. But this December, the music could stop. Vaults in London are running on fumes, Shanghai's inventories are vanishing, and back in the US, COMEX registrable stocks are nearing all-time lows. If just a fraction of contract holders demand real metal instead of rolling over, there won't be enough chairs to go around, and when the system fails to deliver, the illusion evaporates. This isn't some hypothetical. Experts are calling it a credible threat. So, what happens when faith in the paper market dies overnight? What happens when silver's true scarcity is laid bare for the entire world to see? Stick around, because what's coming next could send the price of silver into territory we've never seen before.
Well, I mean, the payback in gold is obviously greater than the payback in silver. So gold is going to be the target. And I would say either generic rounds or bars are going to be the easiest to, they'll be the easiest to counterfeit. I mean, it's more difficult to counterfeit an elaborate coin, but yeah, they can be counterfeited. And that brings me to a topic I want to talk about. In silver, I've been an advocate of junk silver as the best form to own in the United States. Roughly 14 dimes equals an ounce. So you've got 14 transactions. It's the smallest denomination. It's U.S. Mint lineage. It really can't be counterfeited because it's got to show scruffiness. I mean, these were in people's pockets. And we've got an anomaly going on right now where if you're looking to sell junk silver, you're looking at $3.50, $4 under spot. And if you're looking to buy junk silver, you can buy it at spot, maybe 50 cents over spot. It's the cheapest form that you could buy right now. So if you're buying silver, you definitely want to buy junk silver. It's the cheapest and it's the best. And if you're worried because the bid is below spot, and it's well below spot, pretty much everything else is very close to spot or even eagles are above spot. Understand what has happened. We finally got back to this $50 level and we stayed here. We've been here for, call it a month, but we're approaching it. And literally, I'm not going to say the only form or the only way to buy silver in the late 1970s, early 1980s was junk, but that was by far and away the primary form of silver to buy. So what you've seen over the last few months is that many of these people who have held on for 40 plus years have turned seller. And the dealers and the wholesalers got overwhelmed with the selling. So what did they do? They lowered the price. And if they're, call it $4 under spot, that's 8% below spot. And what they're doing is they're sending those coins into refiners to melt them down. And they pick up that 8% is what they're doing. Now, that said, this is a short-term event because the supply is already, the supply of junk being sold is already starting to dry up. And when it does dry up and prices start to normalize, guess what? There's way less junk available that still exists because it's been melted down. And I'm gonna say right here that I think when all is said and done, junk silver is going to become the most expensive form of silver in the United States, even priced higher than eagles. And I say this because I believe the supply is being destroyed on a daily basis.
The signs of collapse aren't just isolated, they're global. In London, once the cornerstone of silver liquidity, the LBMA vaults have been drained to dangerously low levels, now holding barely 6 weeks' worth of global demand. Just a few years ago, they had over 300 million ounces in reserve. Today, that number has shrunk to levels that should terrify anyone watching this market. Meanwhile, across the world in Shanghai, the same story is playing out. Physical silver is vanishing from warehouses, premiums are soaring, and buyers are scrambling to secure supply ahead of delivery windows. It's not a regional issue anymore. It's a worldwide drought. And 2025 marks the 5th straight year of global supply deficits, with this year's shortfall alone estimated between 117 and 149 million ounces. That's on top of a cumulative 800 million ounce deficit since 2021. Even a surge in recycling couldn't plug the gap. The scarcity is real, and no amount of paper contracts can mint new silver. What we're seeing now isn't a blip. It's the system cracking under years of unsustainable demand and dwindling reserves. And it's this tightening noose around global inventories that's setting the stage for the chaos about to erupt on COMEX.
Well, yeah, the market is, the bottom line is all of the futures, options, paper products, etc., they're all based off of the physical metal in the first place anyway. That's why they're called derivatives. They're derivatives of the actual product. There's not as much concern. There's concern. If gold doesn't deliver, the system dies anyway. But if gold doesn't deliver, it's not a direct effect on production, if you will. Silver is used in so many different applications, whether it be industrial, technological, medicinal. I just did an interview and was talking about every time they shoot a Tomahawk missile, there goes a monster box. You can't make a Tomahawk missile without roughly 500 ounces of silver. So silver will have profound ramifications to the real world, to the real economy. Now, that said, if silver goes failure to deliver or gold goes failure to deliver, you're stuck in the casino because the casino will close. And when the casino closes, and we've talked about this, for the last, year and a half, maybe even 2 years, we've talked about the great taking. Once the casino closes and banks and brokers and insurance companies start going belly up, they're going to take your capital with them. And that's why it's so important to get your capital out of the system into something, gold and silver, that cannot bankrupt, and in a place where it can't be taken from. Well, going back to visit the late 2019 episode, that was just before COVID. And the repo rates spiked to 10%, and that the Fed was having to put $100+ billion into that market every single night so it could clear. Then conveniently along came COVID, and two things happened. The real economy worldwide was definitely stunted or shut down, whatever you want to call it. There was less demand for credit because of COVID. And it allowed central banks all over the world to flood the markets with liquidity. Problem solved. Not solved, but the can was kicked down the road. Here we are again. We're nowhere near where we were in October of 2019, but the overnight rates are starting to move higher again. It's a concern and should be watched. Again, everything, whether it be the real economy, production, consumption, transit, and also the financial world, the financial economy, everything runs on credit. If credit gets disrupted or credit ceases anywhere, it'll be a shock that will, it'll shut the whole system down.
Just before we get going, we just launched the official Silver News Daily Telegram. To kick things off, we're running a 10-ounce silver giveaway. Yes, real physical silver, not a voucher, not digital credits, actual bullion. This Telegram will be our new home for real-time silver discussions, market insights, collection picks, and everything precious metals. It's where the community truly comes alive. Here's how to enter the 10-ounce silver giveaway. Be subscribed to Silver News Daily on YouTube. Turn on the notification bell. Comment 10-ounce giveaway on 3 separate videos. Be an active member of the Telegram group and say hi. Once we hit 500 active Telegram members, we'll pick one lucky winner to receive 10 ounces of silver
All
shipped
eyes are now
directly
locked
to
on
you.
COMEX,
So get in early,
where the
stay
pressure is
active.
reaching a critical point. For years, traders have treated futures contracts like a casino, betting on paper promises of silver with no intention of taking delivery. But that game is breaking down. In recent months, something unprecedented has been unfolding. Up to 100% of contract holders in certain delivery periods are demanding physical silver. Not cash, not rollovers, real metal. And COMEX doesn't have enough of it. Registered inventories are collapsing, with withdrawals now outpacing deposits quarter after quarter. Settlement times are stretching from days to weeks. What used to be T+1 delivery is now taking up to 8 weeks or more. This isn't normal. It's the kind of stress you see right before a system fails. And if December sees even a modest spike in delivery requests, COMEX could be caught completely off guard. A failure to deliver isn't just a delay, it's a crack in the foundation. Because once faith in the exchange breaks, it won't come back. That trust is everything. And if silver contracts can't be honored, the entire pricing structure tied to those contracts collapses. The paper market's dominance is being tested, and it's on the verge of losing.
That's simple. I mean, just look at spot, and if today in this market right now, if you're looking at a high premium, anything over, I don't know, even 5 or 6% for gold eagles, anything over that, you're getting ripped off because the premiums don't exist today. Most products can be purchased within 5% of spot. It's a shame. It's predatory. I mean, I'm not going to name names, but I mean, just as an example, there was someone, representing a firm that, had pretty good information on YouTube. Not all of it was correct, but it was mostly correct and pretty good. And, you're taking grandmotherly advice, and that was a firm that was charging whatever the fair rate was. They were charging 26% commission on top of that. So what is that? Is that gouging? Is it stealing? It's horrible. And it gives a bad name to this industry. And it's not illegal. It's not illegal because it's not a regulated industry. But I'm pretty sure, when you're standing at the gates of heaven, it's illegal. That's a black mark.
The entire paper-silver market rests on a dangerous assumption that most people will never ask for the metal they're owed. It's a sleight of hand that's worked for decades, but it only works when confidence is intact. COMEX and LBMA trade mountains of silver on paper, often representing hundreds of times more silver than actually exists. This leverage has allowed banks and institutions to suppress the price, flood the market with synthetic supply, and maintain an illusion of abundance. But here's the problem. Once physical demand overwhelms that illusion, the leverage flips from an advantage to a liability. When traders begin to realize that a contract may be nothing more than a promise in an empty vault, the demand shifts violently from paper to physical, and paper starts burning. We're already seeing premiums spike on coins and bars, with delivery times stretching and dealers warning of stockouts. Arbitrage is breaking down. Investors aren't just nervous, they're fleeing the paper system altogether. And when the dam breaks, the suppression mechanisms fail. The price is no longer dictated by synthetic contracts. It's dictated by who actually has the silver. And right now, that number is shrinking fast. The flaw in the system isn't just academic anymore. It's about to be exposed to the world.
Right. There's always some risk. I think the risk will be greater as the prices go higher. And I would simply say, either call me or call you. We clear our business through Miles Franklin, and Miles Franklin's been in business over 30 years and never had, they have never delivered a counterfeit coin as far as I know, has never delivered one counterfeit coin to a customer. And if it was done, it was rectified. But understand that if you go through a reputable broker, their business is done. If they send you a counterfeit gold eagle or gold bar or silver or whatever, if they send counterfeit to you, their business is done, because then their reputation, their word is broken. So I would just say, and do understand that any time metal is shipped out, it's done 100% under camera, and the coins that they receive, other than coins directly from the U.S. Mint, it's my understanding that all coins are assayed and proven to be real when they come in before they go back out. So if you use a reputable dealer, use us, Miles Franklin, you're going to get the real deal.
As the paper market teeters, industrial demand is quietly tightening the stranglehold. Unlike investors, industrial buyers don't care about market games or COMEX charts. They need silver to keep their operations running, and they'll pay whatever it takes to get it. In 2024, industrial demand hit a record 680.5 million ounces, with projections showing that number holding firm into 2025. The solar industry alone now consumes over 230 million ounces annually, and each panel requires around 20 grams of silver, non-negotiable, with no viable substitutes. EVS, 5G infrastructure, AI components, defense systems. Every one of these sectors is growing, and every one of them is devouring silver. And here's the kicker. These buyers are starting to lock in forward supply at premiums well above spot price, cutting off availability for everyone else. That's how you know this isn't just a trading story. It's a real-world supply war. Photovoltaics are forecast to exceed 300 million ounces per year by 2030, and electric vehicle production is ramping up globally. Silver isn't optional for these sectors. It's essential. And with no scalable substitution and shrinking above-ground stocks, industrial demand is now acting as a relentless force, pulling physical silver off the market faster than it can be replaced. What happens when industry and investors are both fighting over a shrinking pool? You get a buying frenzy and a price explosion.
I'm watching silver in particular, COMEX silver. Also, we're seeing now that silver is obviously tight in London, but it's also becoming tight in Shanghai. This is a global phenomena. This is not, oh, there's plenty of silver, but it's in the wrong place. No, there's not plenty of silver. And what I'm watching as far as COMEX is concerned, November is strictly a non-delivery month. And the amount of contracts being added on a daily basis for November delivery is astounding. December, on the other hand, is a big delivery month. And I question, can they deliver 60, 70, 100 million ounces for the month of December? I don't know. It just looks to me like the failure to deliver, we're walking on a knife's edge at this point. BillHolter.com. You can contact me through the site, or you can contact me through my business email. It's BHOLTER@proton.me. And I do want to remind people, if you go to my website, absolutely go to Grizzly's Corner. It's an icon up top. There is just unbelievable prepping information. There's links to products, not products that I get paid for or support, endorse or anything. But these are products that the guy who wrote and has written pretty much everything, and he's a survivalist guy, for Grizzly's Corner. These are products that he's used and been happy with the quality of the product. So use that as a resource. If you're trying to prep, if you're trying to get ready for stuff, there's information from soup to nuts on prepping and survival on the website under the icon Grizzly. Again, it's been a slow boil, and you're watching the things I talked about years ago come to fruition, on a daily basis. And that being said, if I was wrong about everything, except buy gold, buy silver, And I'll remind you, when I retired from the brokerage industry, I had one of the largest retail uh, gold, silver, and mining share positions for customers in the country. I will just say, if I was wrong about everything, but you bought gold and you bought silver in the year 2000, you did better than anybody else on the planet.
Now let's talk numbers, the kind that used to sound insane but today feel increasingly inevitable. A $500 silver price might have once seemed like fantasy, but when you map out the forces at play, it's not just plausible. It starts to look conservative. The last time silver came close to blowing the roof off was in 1980 and again in 2011. Both times, it spiked to nearly $50 an ounce before getting hammered down by coordinated efforts from central banks and paper market manipulation. But this time, the foundation is different. We're not just dealing with speculative mania. We're staring at a structural supply shortfall, a global energy transition, an industrial bidding war, and a paper market that's crumbling under its own weight. The gold-silver ratio is already flashing a historic reversal signal, and once that unwinds, silver doesn't just catch up to gold. It overshoots with violent speed. Meanwhile, big institutions are starting to reposition. Major banks are advising clients to shift 20 to 50% of their portfolios into precious metals. And silver is expected to follow gold's trajectory with even greater torque. When you strip away the artificial pressure of the paper market, you reveal a metal that's been severely undervalued for decades. Once that spring is released, the snapback won't stop at $50. It won't stop at $100. If COMEX fails and the physical market takes over, 500 silver won't be a moonshot. It'll be a price discovery event.
Yeah, I would just say welcome to the party. And next, I would say we have interest rates still at basically generational lows. I mean, we're not where we were 3 or 4 years ago. We're not at 0% rates, but rates are extremely low. There's no risk premium in interest rates at all. So brokers and banks, they understand that the likelihood long term, 5 years, 10 years, longer than that, the likelihood is that rates are going to go higher, not lower. And they also understand that there's going to have to be another mass printing, whether they call it QE or not, it doesn't matter. But there's going to be another global mass printing. And the problem with that is that debases the currencies, and that lowers the value of the unbacked currencies. If the values are lower, then you got to give more of dollars or euros or yen or whatever for that same ounce of gold or the same ounce of silver. So I think they're looking at it pragmatically and saying, yeah, the day of buying and holding bonds is over, and that's why they're recommending half of that bond position be liquidated and put into gold. The only problem with that is if everybody did that, you'd have gold at probably, who knows, $2 million an ounce. Just, pick a number, but it's going to be super.
But the silver crisis isn't happening in isolation. It's unfolding against the backdrop of a deeply unstable financial system. Global banks are already under strain. Repo markets are flashing warning signals, and debt levels are spiraling into uncharted territory. As confidence erodes, capital is fleeing traditional assets, and that capital needs a new home, one that can't be inflated away or defaulted on. Enter silver. While gold remains the go-to for monetary insurance, silver is quickly becoming the alternative bet for those who want exposure to both monetary chaos and industrial growth. And unlike gold, silver's physical market is razor thin. It doesn't take much to cause disruption, and the smart money knows this. That's why high net worth investors and institutions are moving fast. Some are pulling metal directly out of vaults, bypassing the COMEX system entirely. Others are warning that a banking crisis could lead to capital controls, liquidity freezes, or even seizure of assets, making physical metal a last line of defense. As trust in the banking system decays, silver becomes more than just a commodity. It becomes a form of off-grid wealth, one that's immune to bail-ins and fiat devaluation. And with every new banking scare, every failed bond auction, every whispered rumor of insolvency, more people are waking up to that reality. The run on silver isn't coming. It's already started.
I mean, the paper markets were the tail on the dog, but the tail constantly wagged the dog because they would overwhelm the physical markets with paper. The problem now is they've done it for so long and to such a grand extent that now there's a question whether these paper contracts are going to be able to deliver. And the answer I think you're going to find in the next month to 3 months, we're going to find out that no, the paper markets are not a substitute for real physical because they have to deliver real physical that does not exist to be right. And I think at the peak, American Eagles were $17, $18 over spot, and junk was as high as $13 over spot. And at the time, the premium on bars really didn't move much. I mean, I think 100-ounce bars maybe were $3 over spot. And that's pretty close to where they are now. The bar market has not moved much, but yeah, junk has had the premium has collapsed and gone negative, and I think it's a no-brainer to buy junk silver right here.
If COMEX fails this December, it won't just be a technical error. It will be the spark that ignites a global silver reset. The moment delivery is missed, the illusion shatters. Everyone, from hedge funds to sovereign wealth, will know the truth. There's far less silver than the world believed, and the entire pricing system has been built on a lie. Futures contracts will be seen for what they are, empty promises with no metal behind them. And when that happens, silver will no longer trade based on paper. It will trade based on scarcity, desperation, and reality. Premiums will explode, spot will be irrelevant, and physical will rule the market. A $500 silver price won't be hype. It will be the new floor as institutions scramble to cover physical exposure they never thought they'd have to honor. The metal itself will become untouchable, snapped up by industry, hoarded by investors, and priced by availability, not speculation. This is the moment when silver finally breaks free from the paper shackles that have bound it for decades. If you're still watching, now is the time to stay informed, stay prepared, and make sure you're not holding an IOU when the vaults run dry. Don't forget to subscribe for more market-shifting insights. And remember, this is not financial advice. Always speak to a professional before making any financial decisions.